Imagine this. The very bank that spent decades crushing your dreams of silver riches, the one that rigged the game against you at every turn, has just betrayed its own playbook. On December 9, 2025, the Economic Times dropped a bombshell that should have frozen the financial world in disbelief. JPMorgan Chase, yes, that JPMorgan, the $3.9 trillion behemoth accused of the largest naked short position in commodity history, just flipped the script. They didn't just exit their infamous 200 million ounce paper short position between June and October this year. No, they went all in on the other side. We're talking 750 million ounces of physical silver scooped up like it was going out of style. That's 750 million ounces, folks, real, tangible metal locked away in vaults, not some digital IOU. At today's prices, that's a staggering $22 billion bet. But here's the gut punch. This isn't a rogue trader's gamble. This is the bank that paid $920 million in fines for precious metals manipulation, whispering to the world that the endgame is here. Have you ever felt like the deck was stacked against you in investing? Like no matter how hard you push for that silver breakout, invisible hands slam the door shut. Well, those hands just open the floodgates. For years, JPMorgan was the shadow puppeteer, flooding the comics with paper shorts to cap silver at $20, $25, keeping it just out of reach for the little guy. Retail investors like you and me watched rallies fizzle into heartbreaks, whispering, "What if?" Now zero shorts. They're long, massively long, on physical silver. Why? Because they know something we don't. Or did they? This move screams transformation, not trade. It's as if the casino owner suddenly bets the house on red after rigging the wheel for black. Picture the boardrooms. Executives who once smirked at suppression strategies now hoarding bars like doomsday preppers. This isn't evolution, it's revolution. And you're invited to the party, but only if you listen close. Because if JPMorgan, the king of the shorts, is loading up on silver like the apocalypse is tomorrow, what does that say about the dollar's throne? About inflation's hidden bite? About the global economy teetering on a precipice? Stick with me, because we're peeling back the layers of this betrayal, exposing the mechanics that kept you in the dark, and arming you with the truth they never wanted you to hear. The silver war is over, or is it just beginning? Let's rewind the tape to the shadows where it all began, because to grasp this betrayal, you have to feel the weight of the history it shatters. JPMorgan's tango with silver isn't new. It's a decades-long dance of deception that started in the smoky backrooms of Wall Street in the early 2000s. Remember 2008? The financial crisis that gutted your savings while banks got bailed out? That's when precious metals like silver became the people's hedge, the shiny rebel against fiat folly. But JPMorgan? They saw opportunity in the chaos. Accused by whistleblowers and regulators alike, they built an empire of paper shorts on the COMEX, the New York exchange where futures contracts live and die. These weren't innocent bets, they were weapons. Naked shorts, selling silver they didn't own, flooding the market with phantom supply to drive prices down. Traders called it the JPMorgan short, a mythical beast that devoured every rally. Why? Control. Silver isn't just bling, it's industrial rocket fuel, solar panels, EVs, electronics. Cheap silver means fat profits for manufacturers, who are often JPMorgan clients. But for you, the investor? It meant watching $50 dreams in 2011 crash back to $15 purgatory. Fines came in 2020, $920 million for spoofing, fake orders to manipulate prices. Yet, they kept playing. Imagine a boxer landing haymakers while the ref looks away. That's JPMorgan in the silver ring. Fast forward to modern times. Post-COVID supply crunches, geopolitical fires in Ukraine and the Middle East, inflation gnawing at your grocery bill like termites on timber. Silver should have soared. Mine production flatlines at 800 million ounces yearly, demand exploding to 1.2 billion. But no. Every spike toward $30? Bam, mysterious megasells. Retail forums lit up with fury. JPMorgan again? It was legendary. A hidden truth whispered in precious metal circles like a forbidden incantation. Governments hoarded gold. Central banks eyed diversification. Yet silver, the forgotten stepchild, stayed shackled. This wasn't accident. It was architecture. JPMorgan's quants, armed with algorithms, turned the market into their playground. Emotional resonance? Think of the retiree who bet his nest egg on silver in 2020, only to see it kneecapped. Or the millennial stacking coins against student debt doom. Their pain was engineered. And now? That fortress of suppression crumbles. Why abandon a winning strategy? Because the game's rigged too tight, and the rope's fraying. As we dive deeper, ask yourself, if the suppressors are surrendering, what storm are they bracing for? The betrayal isn't just in the flip, it's in the facade they maintained while the world burned. Now, let's zoom into the pivot point, that seismic shift from June to October 2025, when JPMorgan didn't just step back, they leaped across the chasm. Picture this. For years, their 200 million ounce short position loomed like a guillotine over silver bulls. That's a quarter of annual global production in paper claims, enough to drown any price surge in a sea of synthetic supply. But in a blink, for short months, they unwound it all. 0 contracts left. How do you even execute that without sparking Armageddon? Stealth, my friends. Quietly rolling positions, offsetting with longs, all under the radar of CFTC reports that lagged like a drunk uncle at a wedding. No fanfare, no press release, just cold, calculated closure. Why now? Timing is the tell. Inflation's official tame at 2.5%, but shadow metrics scream 7%. Your rent, your gas, your sanity. Fed whispers rate cuts, but whispers turn to roars when China's hoarding rare earths and India's solar boom devours silver like candy. JPMorgan's exit wasn't retreat, it was reconnaissance. They saw the shorts becoming liabilities, margin calls looming as physical squeezes loomed on the horizon. Remember Hunt Brothers in 1980? Cornered the market, prices tripled, then regulators crushed them. JPMorgan learned, paper empires crumble when metal men march. This unwind? It's the sound of chains breaking. Rhetorically, doesn't it chill you? The bank that profited from your pain now flees the fire they lit. Emotionally, it's vindication laced with venom. Those late nights charting candlesticks, cursing the big boys, validated in a single quarter's filings. But wait, the betrayal deepens. Closing shorts frees capital, sure, but it's what they did next that exposes the abyss. No victory lap for bears. Instead, a mad dash to the vaults. This flip isn't hedging. It's heresy against their own creed. In boardrooms where greed is gospel, abandoning suppression means conviction. Silver's undervalued, poised to punish the doubters. For ordinary folks, it's a siren. If the manipulators are bailing on bets, your portfolio's playing catch-up. As we unpack the hoard, feel the drama? This isn't finance. It's fable, with JPMorgan as the fallen villain turning hero? Or is it just another mask? The hidden truth? They didn't lose faith in shorts. They outgrew the illusion. The market's mirror is cracking, and they're stocking up before the shards fly. Stay tuned. The real shock is in the scale. Hold onto your seats, because here's where the plot thickens into thriller territory. Post-unwind, JPMorgan didn't pause for breath. They launched the greatest physical silver accumulation in modern annals. 750 million ounces. Let that sink in like mercury in your veins. Not ETFs, not futures fluff, Actual bullion, bars stacked in fortified vaults from London to Delaware, guarded like Fort Knox's naughty secret. That's equivalent to nearly a full year's global mine output, 800 million ounces from Peru to Mexico, all to fuel one bank's war chest. At $29 per ounce today, it's $22 billion deployed, their entry stake before the moonshot. But scale it, more silver than the U.S. Strategic Reserve, dwarfing India's 200 million ounce stockpile. This isn't a bet, it's a barricade. How'd they pull it off? Discreetly, through proxies, OTC deals, unallocated accounts flipped to allocated, siphoning from refiners before mints even mint. No COMEX chaos, just vanishing supply. Miners report backlogs. Premiums skyrocket 20% on physical coins. The betrayal? While they hoarded, you paid premiums, chased spot prices that lied. Dramatic pause. Imagine waking to find the ocean drained. That's silver's liquidity post-JPM. Rhetorical fire. What if I told you the bank that starved the market now owns the pantry? Emotion hits home. The stacker who couldn't find a single eagle last month. Premiums at 15% over spot, while JPMorgan's vaults groan under billions in bars. This hoard signals singularity, diversification on steroids. With $3.9 trillion assets, $22 billion is a rounding error, yet it's laser-focused. Why silver over gold? Leverage. Gold's $13 trillion market, silver's $1.2 T, room to run 10x. Industrial demand? EVs need 50 grams each, solar a ton per gigawatt. Geopolitics? Tariffs, sanctions, supply chains snap like twigs. JPMorgan's move? Premonition. They're not traders. They're titans, positioning for a world where fiat falters. For you, the everyman? It's a wake-up, physical over paper now. The hidden truth they buried? Accumulation isn't greed. It's gospel for the coming gale. As analogies go, it's Noah building the ark while neighbors mock the rain. Feel the urgency? This isn't history. It's harbinger. Next, we dissect the data. Why this math spells mutiny against the status quo. The betrayal's blueprint is bare. They know the dam's breaking, and they're upstream. All right, let's strip this down to the bones. No jargon, just the raw mechanics that make this flip a financial Frankenstein. Start with the shorts. A short position means betting down. JPMorgan sold 200 million ounces forward, promising delivery they had no intent to make, banking on prices falling to buy cheap later. Profit? The spread, your loss. Data from CFTC's Commitments of Traders reports, weeklies, bank section, showed them at 40% of open interest, dominance. Unwinding? They bought back contracts, netting out positions without delivery demands. Cost? Minimal in a down market, but the signal? Cataclysmic. Now, the hoard. Physical silver flows via LBMA, London Bullion Market Association. Their allocated bars, serial numbered, insured, jumped 750 ounce. Track it. COMEX eligible stocks dipped 15% YTD. LBMA cleared volume spiked 30%. Mine supply, USGS data pegs 2025 at 810 mAs. Demand 1.24 BAs. Deficit 430 m. JPMorgan grabbed 93% of that gap. Simple math. If they hold 750 m, that's 10% of above-ground stocks, 7.5 BAs total. Analogy? Like a whale swallowing the pond. Why mechanics matter? Paper-to-physical ratio on COMEX hit 250 to 1 pre-flip. 250 claims per real ounce, pure illusion. Now, with shorts gone and vaults full, ratio crashes toward 50 to 1. Squeeze mechanics. If bulls demand delivery, as in 2011's near miss, prices explode, $50, $100? Data backs it. Silver's beta to gold is 2.5x. Gold at $2,500 signals silver $40 min. Inflation adjusted, 1980 peak was $150 per Oz today. Emotionally? It's the scales falling. You've been trading shadows while they touched the real. Rhetorical. Ever wonder why your silver ETF lagged spot by 5%? Paper dilution. JPMorgan's betrayal exposes it. They fled the fraud for the fortress. For non-experts, think supermarket, endless coupons, paper, devalue the loaf, physical. They bought the bakery. Global tie-in. China's PBOC added 20 tons gold Q3. Silver's next. Watch CFTC Fridays. Bank long surging. This data isn't dry. It's dynamite, proving transformation. Ordinary eyes glaze at charts, but this? It's your wallet's weather vane. As we pivot to examples, feel the reveal. The hidden truth isn't numbers. It's the narrative they suppressed. Silver's not speculative. It's salvation. And they're stocking the lifeboats. To make this visceral, let's ground the betrayal in stories that mirror your mirror. Real-world examples where JPMorgan's flip rewrites the rules for the rest of us. First, the miner, Juan in Bolivia, hacking silver from Cerro Rico veins. Annual output? 10 M Oz globally from such depths. JPMorgan's 750 M hoard? 75 years of his life's work, vanished into vaults. Now, premiums soar. He gets 10% more per kilo, but refineries backlog 3 months. Ripple? Small ops thrive, but your local dealer? Eagles at $40 over spot. Analogy. It's the baker cornered on flour, dough rising unchecked. Compared to 2021's GameStop frenzy, short squeezed to $483 per share. Silver's potential? 10x bigger with physical punch. Example 2. The solar farmer in Texas, Amy, wiring panels for her off-grid ranch. Silver paste, 20 G per panel. Pre-hoard, cost stable. Now, up 15% as JPMorgan diverts supply. Her break-even? Delayed 6 months. For you? EV dreams in your garage. Ford F-150 Lightning needs 200-ounce equivalent. Prices jump, your lease bites harder. Emotional hook. Remember 2008, when gold saved nests but silver was sidelined? Now it's starring. Rhetorical. What if your retirement rode this wave, not the last crash? Third, the central banker in Ankara, Turkey's reserves, 50 M Oz silver, dwarfed by JPM's grab. They eye diversification. Lira's toast at 40:1 USD. JPM's move? Greenlight's global shift. Silver ETFs inflows double to $5 billion Q4. Your 401k? If tilted metals, up 8% YTD. Fiat funds? Flat. Hidden truth. While you chase crypto ghosts, they build bullion bunkers. Analogy. Chess grandmaster sacrificing pawns for queen. Shorts were fodder, or the checkmate. Fast forward. If silver hits $50, analysts whisper $75 by 2027. Per Bloomberg, JPM's $22 billion flips to $37.5 billion, 68% unrealized gain. But for ordinary Jane, that $1,000 stack from 2020? Now $2,300, compounding the what if of suppressed years. Geopolitical echo. Russia's sanctioned gold rush. Silver's turn as BRICS hedge. Watch India. 1 Oz demand yearly. This isn't abstract. It's your fuel bill, your tech toys, your freedom fund. The betrayal stings because it spotlights inequality. They manipulated misery, now mind the bounty. As conclusion looms, feel the resonance. This hidden aspect isn't Wall Street's. It's your economy's underbelly exposed. Act now, or echo the sideline. As the curtain falls on this saga of silver subterfuge, let's confront the reckoning. JPMorgan's $22 billion betrayal isn't a Wall Street sideshow. It's a spotlight on the fragility of your financial future, demanding you listen before the lights dim. Why now? Because in 2025's tinderbox, AI energy hogs sucking silver for chips, green revolutions guzzling it for grids, dollar wobbles under $35t debt, their horde heralds hyperinflation's whisper turning to howl. For ordinary people like you, scraping by on wages up 4% while costs claw 7%, this matters viscerally. Your grocery cart? Silver and packaging, but more? The EV UI for commutes, the solar rebates slipping away as panels pricier. Watch out, paper assets erode, stocks tethered to fiat froth, bonds yielding dust. Learn, diversify to physical. That $500 monthly? Half in silver coins, half skills, gardening, coding, against black swans. Rhetorical thunder. What if the bank that betrayed the market betrays the masses next? Emotion swells. This hidden truth, once their secret, now your shield. They position for transformation, deglobalization, de-dollarization. BRICS summits buzz silver standards. Your pension? Vulnerable. Conclusions call. Don't spectate. Stack. JPMorgan flipped because suppression shelf life expired. Yours? Infinite if you act. The $22 billion? Their ante. Yours, prudence. Feel the drama. From manipulated minnow to awakened whale. This isn't end, it's enlightenment. Subscribe, share this expose, because secrets like this, they were never meant for your ears, but now they're yours. The silver lining? In betrayal, birth. A fairer fight, if you join it. What's your move?